Okay, welcome to this deep dive. We've got quite a stack of material here, all zeroing in on Bitcoin.
Yeah, specifically, we're digging into what these sources you've shared are telling us about, well, the market action in late May 2025 and what analysts think might be coming next.
Exactly. And our mission really is to cut through all the noise in these articles and notes you provided, find the most important insights, and help you understand what's driving Bitcoin right now and where the experts think it might be heading.
Right. Let's unpack it.
So looking at this past week, say May 24th to the 30th, the picture from your sources, it shows Bitcoin pulled back a bit after hitting some, well, pretty impressive highs earlier in the month.
That's right. Yeah, after getting up near, what was it, $111,000, almost $112,000, the price dipped. It fell below $110,000, trading around $108,000 initially.
And that continued, didn't it? Dropping more into the $105,700 to $106,300 range by the end of the week.
It did. That's more than 5% down from those recent peaks.
So what were the sources pointing to as the reason?
Well, a couple of things came up. Hints of a potential U.S. tariff war, and just general policy shifts that seem to create a bit of a risk-off feeling in the markets.
So broader economic jitters spilling over.
Exactly. And that failure to hold the $110,000 level, some analysts saw that as, increasing the chance of a bigger correction.
Made people nervous about the short-term momentum, I guess.
It certainly did. And we saw some specific things happening in the market, too. Short-term holders, for instance, they moved over $1.1 billion in Bitcoin, likely taking profit.
$1 billion, okay.
Yeah, and then there was that really big options expiry, $10 billion on May 30th. That always has the potential to stir things up, add some volatility.
Right, those expiry dates. And anything else?
Just a small note that, interestingly, altcoins seem to be doing their own thing, slightly different trend, maybe, during that specific window.
Okay, but here's where it gets, well, really interesting for me. While the price was doing that short-term dip, the signals from, major players seem incredibly strong based on these sources.
Oh, absolutely. What really stands out is the continued institutional and maybe even more surprisingly governmental activity. One source mentioned the U.S. government set up a strategic Bitcoin reserve back in March, holding 200,000 Bitcoin.
Wait, 200,000 BTC held by the U.S. government?
That's what one source stated.
Wow, that feels significant, like a statement about its future role, doesn't it?
It certainly implies a level of strategic importance. And speaking of adoption, you had GameStop buying 4,710 BTC on May 28th, adding it to their balance sheet.
GameStop. Right, another company seeing it as a treasury asset then.
Seems that way. And we also saw, broader political mentions. Trump's sons apparently spoke quite positively about crypto at a conference, so it's entering that mainstream political chat too.
Okay, so specific actions. What about the underlying market indicators?
Still looking strong, according to these sources. The Bitcoin spot ETFs, for example, they saw inflows of over $4 billion just in May.
$4 billion in 1 month through the ETFs.
Yeah, that kind of sustained flow through regulated channels as well. It's a big deal structurally. And then you have Bitcoin options open interest hitting an all-time high.
Which suggests?
It suggests traders are positioning for higher prices down the road. They're betting on upside, not, a crash.
And the basic blockchain health. Active wallets, transactions.
Sources noted that remains robust, healthy network usage, basically.
Interesting. You also mentioned a macro factor.
Yeah, the potential for a U.S. credit rating downgrade was flagged. Kind of counterintuitively, that could actually boost interest in Bitcoin as a sort of digital gold, non-sovereign alternative, maybe.
Okay. So we've got this recent dip influenced by macro stuff and some profit-taking. But underneath these really strong signals and adoption trends, what does this mix tell us about the future, according to these analyses?
Well, there's a pretty clear split in the outlook presented here. Caution maybe in the very near term, but quite a bit of optimism for the longer term.
Okay, what's the short-term caution look like?
Several analyses suggested we could see more correction or maybe just sideways trading for a bit. Glassnode, for example, they pointed to $120,000 as a key resistance level, a point where selling pressure might pick up.
Okay, a potential hurdle at 120K.
Right. And another analyst made the point that historically having 7 or 8 bullish weeks in a row is actually quite rare. So after the strong run we saw earlier in May, a pause or some consolidation, it wouldn't be statistically surprising.
So maybe you need to digest the gains a bit. But the long-term view, You said optimistic.
Very much so. Yeah, when you look at the targets for the end of 2025 presented in these sources, they cover a wide range, but it's overwhelmingly positive.
Give us the numbers. What are they saying?
Okay, so Stock Money Lizard and the head of Presto Research, they both see potential to break $200,000, maybe $200K to $210K.
Wow. Doubling from recent highs within the year.
That's the projection. And then Sminstone Weed, using specific models like the 365-day moving average and the power law model, analyzed a potential rise even higher, forecasting maybe $220,000 or potentially up to $330,000 by year-end 2025.
330,000.
Yeah.
Goodness. Are these outliers or?
Well, you also have major institutions like Standard Chartered and Bernstein. They're also forecasting $200,000, and they specifically point to those strong, sustained ETF inflows as a key reason.
Right, the ETFs again. So it's a recurring theme.
It is. That flow of capital is seen as a game changer. And, other analyses in your sources suggest that even targets like $150,000 to $180,000 are still seen as valid possibilities.
So even the more, let's say, conservative end of these long-term forecasts is still pointing way up from where we are now.
Definitely. And the reasons they cite for this bullish long-term outlook, well, they connect to the bigger picture. Things like the current market pattern looking similar to past bull cycles, growing adoption by companies, and importantly, governments like the U.S. growing global liquidity. And these wider market structure changes like blockchain tech generally and tokenizing real-world assets, all seen as positive drivers.
Makes sense. But with all that potential upside, the sources were careful to flag risks too, right?
Oh, absolutely. Need to keep those in mind. That $120,000 level we mentioned is still seen as a potential hurdle. Selling could increase there.
Okay.
And we saw that long-term holders recently moved about $4.2 billion worth of Bitcoin. That shows significant profit-taking is happening and, well, could continue. Add supply.
And the macro stuff we talked about earlier.
Yeah, those broader policy changes, tariffs, regulations, any unexpected economic shifts, they can always create headwinds or, sudden volatility.
True. Unpredictable elements.
And finally, just the basic market risk. If buying gets too fast, too speculative, you can get sharp pullbacks. Corrections are always possible.
Right. So bringing this all together for you listening, the picture painted by these sources seems to be a market that's navigating some short-term choppiness right now, a correction phase.
Yeah, dip influenced by those macro worries and some people cashing in profit.
Exactly. But this is happening against a backdrop of really strong underlying signals, isn't it?
Yeah.
We're seeing increasing adoption from big players, governments even.
Those consistent large ETF inflows, traders betting on higher prices in the options market, solid on-chain data.
Right. All those fundamentals seem pretty solid according to these analyses.
And because of those powerful underlying drivers, the expert predictions for the longer term, looking out to the end of 2025, they stay overwhelmingly optimistic. Targets from, 150K all the way up to potentially 330K.
So it really seems to be about weighing those current, maybe temporary pressures and risks against that widely bullish longer-term story that emerges from these different analyses you shared.
That sums it up well.
Which leads to the final thought for you to consider. Given these contrasting forces, the short-term challenges versus the strong long-term optimistic forecasts we've just discussed from the sources, how do you interpret this current phase in the market? Something to think about.